Question 6. Which qualitative characteristic supports the theory that cents can be omitted from accounting reports? A. Relevance, B. Monetary unit, C. Comparability, or D. Reliability. Let's answer this by way of an example. Let's take a really big company like BHP Billiton. So its assets in its balance sheet, its cash assets are $54,690,312.87. Its debtors are $29,298,348.17, and so on. So what actually happens in reality is when they publish their balance sheet so we can read it in the public, they sometimes get rid of the cents. Why? Because it might just make more sense to publish that in dollars, in which case cash might be rounded up to $313, debtors is rounded down to $348, and inventory is rounded down to $521. The point being those numbers are basically the same given their size. It really doesn't matter whether the cents are included or not. In fact, those numbers are so big that generally what happens in reality is that the balance sheet for BHP Billiton will get abbreviated or shortened even further. It will probably be expressed in thousands of dollars, whereby that 54,690,000, etc. actually just becomes that number there, 54,690,000 thousands, which is the same thing. And same with debtors and inventory. It can even go further. BHP Billiton might decide to express its balance sheet in millions and just write 54.7 million, 29.3 million for debtors, and 115.3 million for inventory. The point being, anybody reading that report really isn't going to make any better or worse decision based on the fact whether that number is expressed all the way with those two decimal places showing the cents, or whether we just show the millions on the balance sheet on the right. So which accounting theory says it's okay to get rid of those cents and express it in millions of dollars? A. Relevance, B. Monetary unit, C. Comparability, or D. Reliability. Let's get rid of monetary unit and reliability. Monetary unit just says express things in dollars. It doesn't say whether to have it in cents or not. Reliability is all to do with having evidence and documentation, so we don't rely on estimates, and that's not really to do with this. It could be comparability. It just depends. What did BHP do in previous periods? We don't know that. So what we're going to do is go with A, relevance. But why? Let's look at the definition of relevance. It says information is relevant if it influences the decision making of the user. The implication there is we include everything which will influence our decisions, and we can exclude everything that won't influence our decisions. It could be argued for a business the size of BHP, and in fact nearly every business, that eliminating cents and just rounding up or down won't affect your decision making one way or the other. So using that justification, we can omit the cents from the accounting reports under the qualitative characteristic of relevance.